I wrote a book a few years ago it's really about my experience and also the work that I've done over the past 18 years at BMA. And I really feel like I was very, very fortunate because in my first job as a chief financial officer, I had a very good experience in a lean transformation. And it totally changed the way I thought about the role of the chief financial officer, about the role of accounting in a lean organization. And here's why my thinking changed. We were a very traditional mass production manufacturing company. You could see that by our numbers. We didn't have a good lead time, we had poor on-time delivery, and we had lots of inventory. We made a commitment to lean, we hired people with lean experience, and within about 2 years, we dramatically improved our operating performance. Our lead time went down to 3 days. That's for every order that came in the door. We had very high on-time delivery, and we did it all without finished goods inventory. So lots of operational success. However, this is what really changed my thinking. This is the financial impact. Our sales growth, same products, same prices, went from about 5% a year annual sales growth to over 20. And because of that, we made a lot more money in terms of profits and cash. We paid off all our debt. We never had to borrow from the bank. We could invest in the assets we wanted to invest in. And this really changed my thinking because I saw firsthand what lean does financially. And here's what I learned. Management accounting must change to adapt to lean. We're going to talk a little bit about this in more detail today. You really have to replace your existing management accounting system with a lean management accounting system to make everything really work. You have lean tools and practices, you have lean strategy, you need the numbers to back it up, and that's what management accounting is all about. The lean strategy is very, very different than any other business strategy because it changes the entire organization. No part of the organization is exempt from lean practices or the impact of lean, even the accounting function. And finally, what I learned is senior leadership. I was fortunate enough to be part of the senior leadership team. We thoroughly committed to a lean strategy. We were united in how we thought. We understood that the entire company had to change, and we led that change. And that's something that is ultimately needed for success, as opposed to sort of traditional senior leadership to try to maintain the status quo. So let's talk a little bit about management accounting. For those of you who are not trained financial people or accounting people, there's really two accounting systems in any company. There's the financial accounting system, which is when people talk about accounting, that's what they think of. This is where you report your numbers every month. And accounting does the debits, they do the credits, they balance the books and all that. That's financial accounting. There's another piece, which is management accounting. The customer of management accounting are the managers of the company. This is internal information that is being used in the business. The The Chartered Global Management Accounting Association a few years ago put out Global Management Accounting Principles. And so your management accounting system is supposed to provide insight to create communication within the business about how the business is doing. It's also supposed to provide relevant information. So if you think about lean and lean practices and operations and tools, the information in a management accounting system must be relevant to lean. Analyzing the impact on value, and also building trust through stewardship. And what the last point means is that the managers of the company must trust the system, the management accounting system. So the function of management accounting is really a bridge or a link. It's more of a link between the strategy of the company and the business model, how the business model operates. So if you take this one step further, what's a lean strategy based on? Primarily people understanding value and understanding process. Now, there's lots of other ways to define it, but at a very high level, it's all about that. What's the lean business model? It's about learning. It's about thinking. It's also about all those tools and practices that we learn about in terms of creating flow, pulling everything through the business, about improvement. So because the business model is changing when you would become a lean business and the strategy changes, you have to change the management accounting system. And I get to work with a lot of companies in different industries, and even today, in 2018, even though lean has been around for a long time, even though lean accounting has been around a long time, companies still wrestle with this. You have to change the management accounting system. And really, the earlier you change it, the easier it's going to be in the long run. And I would even say that the earlier that you change the management accounting system, it's going to be easier to understand what lean is doing because you're going to have the right information. So let's talk about lean from a financial viewpoint. There's lots of, we're not going to talk about how you do a Kaizen event here. But when I wrote the book, I came up with this phrase, the economics of lean. Because I was wrestling with, how do you explain lean financially very quickly in a few sentences so that anyone can understand it? So lean is really, from a strategic standpoint, it's a people-centric strategy, and we've had lots of topics on that yesterday, and we have more today. What is lean? From a people viewpoint, it's really about people mastering their work, finding the right problems to solve, having the capabilities to solve the problem, and also having the ability to understand the problem in changing contexts. Not all problems are the same. Business conditions are always changing. They're very dynamic. Ultimately, what we're trying to achieve is getting an organization to do things tomorrow that it can't do today. So now let's look at lean from a financial viewpoint. Lean is primarily a financial growth strategy. It's about making more money. Okay? How do you make more money with lean? Well, this whole idea of people learning, what does that result in? That results in lots of different ways to improve. Ultimately, you eliminate waste. What do you get when you eliminate waste? Time. You create time, which is known as creating capacity. That's the primary outcome of all improvement. Not 100%, but the majority. The organization creates all this time. You use that time and apply it to creating more value and creating a competitive advantage. The story about my experience is primarily related to lead time. We were the first company in our industry to have a short lead time. And that set us apart from the competition. More customers purchased products from us. You create that competitive advantage. You sell more products or you deliver more services. And that drives revenue. So it's primarily a revenue growth strategy. Anyone who says lean is about cutting costs is wrong. It is not true. Will some costs come down over time? Probably. But you're not going to get dramatic cost reductions in the short term if you adopt a lean strategy. And there's still a lot of people out there that think that. So the economics of lean can be summarized through looking at basic economics, supply and demand. On the demand side, an organization delivers value and creates a competitive advantage. That drives revenue growth. For example, my story, our annual growth rate that averaged about 5%, all of a sudden was averaging 20% or more. And that happened in the space of about 2 to 3 years. On the supply side, think of your resources. These are the people and the machines that are creating the value. The concept of continuous improvement is how costs are managed. So the traditional way to manage costs is from the financial statements backwards and saying, well, this is what your costs need to be, figure out how to make that happen. In lean financial management, it's all about focusing your measurements on improvement. How much are we improving? And knowing that. And that controls our costs. So our sales rate was, over 20%. Our costs were going up, maybe 5% a year. If your revenue is growing at 20% annually, your costs are growing at 5% annually, you will make more money. That's the economics of lean at a high level. Now here's a very simple example of the economics of lean at a low level. And this really forms the foundation of how we want to do financial analysis. So we have a value stream that can sell 1,000 units a month at 200. And there's our profitability. We have 200,000 in revenue, 120,000 in material, 60,000 in production costs, and we make 20,000. So through various continuous improvement efforts, we create 20% more capacity. So now there is demand, and we can now produce and sell 1,200 units. So the question is, what's the cost of those 200 units? It's only the material cost. The revenue goes up, the material cost goes up, our production costs stay the same because we have created that capacity. And now we can make $36,000 a month, not $20,000 a month. So revenue goes up 20%, profits go up 80%. This is the financial leverage of lean. And this is what lean does in the long run. So we need to be able to model financial analysis around these concepts. Here's another way that thinking has to change. Everybody wants to make more money. Well, we need to increase our profitability rate. How can we cut costs? How can we raise prices? And you go through a lot of financial engineering to figure that out. Focus on flow. Your rate of, in a lean organization, the rate of profitability is in direct relation with your rate of flow. If you improve flow, you will improve profits. It's a very simple concept, but everyone can understand it. You focus the entire organization on flow. The result will be improved profitability. You will probably be the low-cost producer, and you create long-term profitable growth. There's a lot more non-financial people than financial people in an organization. So you have to be able to explain finance, explain and have financial management practices which non-financial people understand and can relate to. Everybody can relate to flow. So we have to change our thinking. Much like we have lean thinking, we have lean financial thinking. And this is organization-wide. This is not just the accounting people. So what do we have to do? Well, first of all, we have to stop financial accounting thinking. What is financial accounting thinking? Now, I'm a trained accountant. I'm a certified accountant in the United States. And I'll admit, we as trained accounting professionals, this is how we're trained to think. And we really can't help it. I mean, our whole accounting education system is based on this. How did we achieve the financial results? And what do? We analyze the financial statements. And we create massive spreadsheets, and we slice and dice the numbers, and we create Excel pivot tables to tell, this is what happened. We try to tell a very good story. And then, of course, we ask operations, well, what happened? And then, what do? We say, well, this is what the numbers need to be. And then, we sort of do top-down financial engineering. What do we have to do in the organization? You have to cut your budget. You have to raise prices. You have to improve margin. And we sort of just give orders. But this is all backwards thinking. Yes, one of the functions of accounting is to analyze the financial statements for the readers of the financial statements. But that's not the only thing you do. Now you contrast financial accounting thinking with lean thinking. What's our current performance? That's how lean people think. What are the problems and issues preventing us from getting better? We drive a lot of improvement activities, we solve problems, and we sustain better performance. So we have to create lean financial thinking throughout the organization. Same thing. What's our current financial performance? We're concerned about tomorrow a lot more inside the organization than what happened yesterday. What are the operational problems preventing us from getting better financially? Solve those problems, improve the delivery of value, improve productivity, and we create sustained financial improvement. So again, this is one of the shifts in thinking. So here's some ways to break that thinking. We have to start really, and we're going to talk a little bit about specific things. Time and costs. Traditional thinking is that the longer it takes to make a product or perform a service, the higher our costs are. That's not true. In a lean organization and lean financial thinking, we want to minimize or eliminate the non-value added time throughout the organization. Labor. This is one of my favorites. Traditional thinking, and really the way it shows up financially, labor is an expense, and we need to manage that expense. And so what do we're very concerned about head count. How many people do we have? And hiring a person is a rigorous process. It's like easier to buy an expensive machine than hire a person. In a lean organization, our people are our most important asset. And what matters is productivity. In my book, I have a whole chapter. I said, head count doesn't matter, productivity does. It doesn't matter how many people you hire as long as you maintain your productivity rates. In fact, I looked this up. The definition, the financial definition of an asset, it's an expenditure that has utility over multiple accounting periods. So that's why we capitalize our machines, because our machines have a useful life. But we expense our labor. But if you think about our people, it's an expenditure, but it has tremendous utility over a long period of time. So it should be an asset. But I can't change financial accounting rules. Our overhead costs. All those other expenses we have. We spend a lot of time trying to allocate these costs to try to better understand the true cost of operations. In lean, we assign the cost where we create the spending decision or the operating activity. We don't want to allocate costs because the allocations are subjective and open to questioning. Financial goals. Make the financial plan. Lean. Make the flow plan. Improve the flow. Cost management. The traditional view is, we have a budget, we're going to measure actual to budget, and we're going to hold people accountable if they don't make their budget. So actual to budget really becomes a performance measure, but it drives the wrong behavior. What we want our managers to understand and learn is the relationships between operational performance, costs, and capacity. And these are dynamic relationships. And finally, profitability. Accounting people are very good at, profitability by customer, by product, by segment, by business unit, whatever. Value streams are the profit centers of your business, of a lean organization. That's where you do all your analysis. So the idea behind lean accounting and financial management is we are trying to create a financial learning system for the entire organization, not just the accounting people. How does lean work financially? And we have to learn this. This is a new way to think. So we need an integrated measurement system so we understand the dynamic relationships between strategy, operations, and the financial numbers. We need to do all our financial analysis based around the economics of lean, and we need to understand the financial impact of lean. So the idea is a lean management accounting system to control and measure the business, have a decision-making framework, the true cause and effect relationships. When you understand the true, and these are not difficult to understand, by the way, in a lean organization. When you can model the true cause and effect relationships, what happens is your financial analysis becomes more predictable because it's based on real numbers, not rates and allocations and assumptions. Accounting must lead this transformation. Accounting has a lot of credibility in an organization. We put out the numbers and we say the numbers are correct. People believe us. Well, we need to lead the transformation into a lean management accounting system. We also need to think of accounting a little bit differently. Because, again, I looked this up last night. I have it written down. What is accounting? Accounting is really the record keeping of the economic activity of a company, of a business. It's record keeping. So we need to think of accounting a little bit differently in a lean organization. First of all, it's not just the people sitting in the accounting department. There's daily accounting, daily operational accounting in a lean organization. How do we measure operational performance on a daily basis? How do we use that information to solve problems and prevent problems? That's accounting. Accountants are not doing it, operational people are doing it. But what I always tell the accountants is you can learn a whole lot by understanding what's going on out there. At the value stream level, we have a weekly cycle of understanding performance and measuring improvement and managing improvement. Then we have our traditional monthly financial cycle of producing the financial statements. So lean management accounting has these three cycles. Ultimately, in terms of learning, we want the entire organization to understand these relationships. And these relationships are not static. They're constantly changing because we're improving. We're improving. Business conditions are changing. The strategy stays the same. So we're trying to develop a lot of financial thinking in the organization to understand these relationships. I always tell the accounting people, you can't do this by yourself. Get the help of the people who are out there in operations and understand exactly what's going on. They can help you. We're trying to, internally, what we're trying to do is measure the flow of money. We have order flow, we have information flow. We all know about that through lean. We're trying to account for the flow of money. What activities did we perform and how much revenue did we generate? What kind of activities did we perform and how much money did we spend? This is for internal use. If you transition internally your organization to thinking about the flow of money, you will achieve financial success. Here's why. Without going into a whole lot of detail, external financial reporting is a bunch of rules you have to follow. And sometimes those rules that you have to follow actually mask the flow of money. So that's why it's difficult to use external reports for internal analysis. We have to make that break. So just to wrap things up, If you think about the principles of lean and a corresponding lean accounting principle, the principle of customer value, that drives the revenue growth strategy. We create value, that's the result. Value streams are the profit centers of your business. Flow and pull will manage your profitability. Continuous improvement or pursuing perfection, that's going to help you manage and control your costs. And finally, we want to empower our employees in terms of like problem solving. We want to also empower them financially, giving them actionable, useful information so that they can relate their operational activities and decisions to financial results. And that's what lean accounting is all about.